Hey, I'm Dan Fitzpatrick at stockmarketmentor.com, and this is your free chart of the day for the weekend of 9, 12, and 13. First of all, you're not going to be getting anything from me Monday evening because I'm having knee surgery Monday around noon, and so you don't want to get anything from me on Monday because I will be totally clueless. But I want to get back to MBLY. I mentioned this, I think it was the chart of the day either on Wednesday, but it might have even been Thursday. My point, what I was talking about was, hey, this downgrade by Citron Research, essentially giving an ultimate price target, I think of like $10, but an intermediate price target of 25. And my suggestion was, don't fade that trade. In other words, don't say, oh, well, they're always wrong. No, they're actually not. They're pretty good. And don't just buy the stock, but I was saying like the pessimism, the downdraft here can give us an opportunity based on a stock that's just, quote, gone down enough. It's just gone down too far. And my suggestion was, you look at this, you see this volume, and I go back and watch that video because I know I had a more in-depth explanation, but you watch this volume and what you're looking for is a trade, not like, oh, I'm going to scoop this up at a bargain price. We don't know whether that's true or not, but you look for a reversal. You look for signs that other people, not you, we're not trailblazers here. We're not Lewis or Clark. You look for signs that other traders, significant amount of money, is soaking up this supply, is taking the stock. And the way you do that is, the way you identify that, the stock closes higher than it opened. There's the keys to the kingdom. When you see a stock that's closed higher than it's opened, you know that the advantage on that particular day or that particular week goes to the buyers. That's really, really simple. So my suggestion was wait for that and then take it for a trade. Well, we got that on Friday. The little bit of a challenge here is that this was the low. The low was 41 bucks. Stock's up now at 46. So, that's a pretty significant, that's over 10% where the stock has moved in a day and closed off the top or off the bottom by 10%. Makes it really difficult for you to put a stop in because the stock could pull back and, where do you put a stop? Here's my suggestion on this. I got a couple other comments to make. Again, it's a trade. I'm just talking about trading tactics here. If the stock starts trading above this high here, 46.59, that's going to take it back above the 200-day moving average, which will have established this as an important low. It's a lower low than this one, but you're probably going to get a couple bucks of upside move. That's really all I can say about this. One other thing. I got an email from somebody. Nobody could foresee this pullback here. Although, well, I shouldn't say that. Here. I was on CNBC here in the morning. And I said that this is going to get ugly. No, this is a sell, not buy opportunity, etc., etc. You want to start selling. So I guess you could say, and by the way, you could look it up. But the point is, this type of stuff is difficult to see. It's difficult to foresee, but it does happen. If you place a trade, like let's say I'm giving you this trade, you agree with my tactics. If you place a trade and your reasoning is sound, and listen to me, I'm giving you pearls and then I'm out of here. If your reasoning is sound for buying a stock, you know where your oops, I'm wrong level is, and it's based on something other than like a feeling or mojo. If you make a trade and your reasoning is sound and you wind up losing money on that trade, that is still a successful trade. This is called trading. It's not called winning. It's not called money harvesting, if only. It's called trading. It's speculation. So I want you to keep that in mind. As long as you have a sound basis for doing what you are doing, you're like a pilot. You plan your flight and then you what? Let's say it together. You fly your plan. As long as you're doing that, it's a successful trade. It didn't make you money, but you didn't get off of your plan. So don't look at any trade that you lose money on as a bad trade. Just like, and this is more important because I'm keeping you out of the poorhouse on this, just like you should not look at every trade that you make money on as being a good trade, because it might just be that you traded like crap. You made a very, very risky move and it just happened to pay off. That's your worst nightmare, because now you're thinking you're good. Now you're thinking that oh my gosh, I've got this whipped. I'm going to always hold stocks over earnings or whatever. So know what your risk is. Have it be an acceptable amount of risk. And then if you lose money, well, it was within your levels of tolerance. It was a tolerable risk. But when you start looking at every losing trade as a loser, I'm telling you, you're setting yourself up for huge failure, because then you're also going to be looking at every winning trade as a great trade. That is just not the case. We're risk managers here. That's what we do. If you're looking to go be a gunslinger, hey, go to Tombstone or Dodge City. You're not going to get it here, okay? All right, that's it for this chart of the day. Members, over to the strategy, or the weekend update, I should say. We're covering, in my view anyway, some important stuff, okay? And if you haven't tried a subscription to Stock Market Mentor, hey, I urge you to do so, because I'm here trying to help you out, and it will make me happy and it will make you money.